Where in the world are you supposed to put your money? Interest rates have gone through the roof. The stock market has gone bananas. Oh, but wait, we have Bitcoin because Bitcoin is making a lot of money right now. Oh, wait, it's not? Crap. Okay, so it doesn't seem like there is a safe haven to put your money. But just over a year ago, I recorded a Fundrise return video where I shared my 3-year returns of investing in Fundrise, which is a real estate crowdfunding platform. So since I celebrated my 4-year anniversary with Fundrise, I thought it would be worth recording an updated video so you can see the returns after 4 years. Technically, it's about 4.5 years. But I thought it was good timing because, as you all know, the stock market's been crazy, the crypto market's been crazy, and many of you are scared you know what on where to invest your money. So let's find out how my Fundrise portfolio is doing and a whole lot more. Let's go. What is going on, GFC fam and Wealth Hacker Nation? It's your boy Jeff. Welcome back to the channel. We were talking about, you guessed it, Fundrise. Fundrise is actually one of my favorite investing platforms, period. I've shared before on the podcast, on the YouTube channel, and also on the blog. I'm not a real, air quotes here, a real estate investor. I'm a wannabe real estate investor. I tried doing real estate years ago. Didn't quite work out for me. That led to me starting the blog, my online business, which has worked out really well. I am blessed by that. That being said, I wanted to figure out how could I become a real estate investor without leaving the confines of what you see here. How could I become a real estate investor without having to get in my car, look at properties, drive around, make offers? It's just stressful. And I didn't want to do that. I tried it. As I mentioned, it didn't work out. So then I just started looking at other ways. So I've invested into private REITs. Like that's something I've looked at. I've invested into ETFs. I've invested, I don't know if I've actually purchased any REIT stocks. I don't think that I have, but then ultimately led me to what we have here, which is Fundrise. And Fundrise to me is just, it's a fun way, Fundrise. Yeah, a fun way to invest into real estate. And the cool thing is that you're investing with other real estate investors. That's why they call it crowdfunding. And for me, initially, this all came because of peer-to-peer lending. I don't know if this is true or not, but for me, peer-to-peer lending, which was like Lending Club and Prosper, was one of those first ways that you could kind of pool your money with other people and do something that was kind of hip, kind of cool, kind of cutting edge. Peer-to-peer lending still exists, although Lending Club has completely shifted, their business model, their current service. I think Prosper is still around. Fast forward to present day, and then we have Fundrise. So Fundrise is a crowdfunding real estate platform that allows you to invest into real estate with other real estate investors. But there's a lot of cool things, but one of the cool things is that it doesn't take a lot of money. They have different tiers, which we'll talk about briefly, different tiers of their platform where you can invest. And their starter tier is just $10 to get you going. But before we get into that, I thought let's just talk a little bit about Fundrise for those that are new to the channel. But I did want to share, if you do want more research, you can go to Fundrise's website all day long. You could also go to the blog, Good Financial Sense, and we have several different articles talking about the Fundrise review. There's a blog post that goes along with all the material I'm talking about in this video on my Fundrise returns. We talk about the self-directed IRA because you can also open an IRA with Fundrise. And there's also Fundrise Alternative. So if you want to check out other crowdfunding platforms, I've got a blog post that summarizes all of that. So let's first address, for anybody that is, maybe you're not quite comfortable with Fundrise because maybe you've just heard of them. Maybe this is the first time that you've ever heard of them. So you're wondering, are they brand new? Did they just launch? So check out some recent stats. So this is as of September 30th, 2022. Currently have 371,000 active investors. Like that's a lot of people. They have done over 7 billion in transactions. That's a lot of money. Net dividends. So this is like if you are an investor, they have paid out over $226 million in net dividends to their investors. So we're not talking some brand new, just launched startup that doesn't know what they're doing. Now that's one thing. Now let's also talk about pricing or fees. Like how much are you going to pay? And you can go once again to their website and they'll walk you through all of this. Who can invest with Fundrise? You got to be at least 18. Just get that out of there. How does pricing work? So investors pay, actually, if you go here and then this will take you to this here. So annual service fee, 0.15%, not 1.5% or 1.15%, 0.15% is their annual servicing fee. On top of that, their annual management fee is 0.85%. So a total of 1%. And here they are comparing it to other, like there's a Blackstone Real Estate Income Trust, Starwood Real Estate Income Trust. Basically, these are private REITs. Just to kind of show you, like with these, you're paying a sales commission, and being a former financial planner, to me, 3.5% actually looks kind of low. Maybe that's what it is now. I can remember back in the day when you were paying 5%, 6%, 7%, sometimes even more. And the best part was that a lot of those fees were hidden. And that's the one thing about Fundrise is that they are completely transparent in their fees. So anything that they say that they are charging you, not only are they putting it out up front, also you see it when you log into your account. They show you how much you are paying. Now, another thing with these private REITs, so here it says carried interest profits above 5% preferred return hurdle. So essentially, like if you're not meeting certain return levels, like the fund gets paid before you do. And with Fundrise, that is not the case. So any money that is made is getting paid to you. It's not going back to the fund, going back to somebody else. You pay, what you see is what you pay. And so what you see is what you get. Now, another thing that I love about Fundrise and the transparency. I mean, it's the transparency. We talk about the fees, but also transparency in what you own. Because anytime that you buy a mutual fund or a ETF or even a stock, that is a REIT. You don't really know what properties do you own. You may know that they're investing into commercial properties. You may know that they're investing into duplexes, but you don't actually know what are the actual locations, like what are the actual properties. In a state where transparency is so big nowadays, like to me, like this is one of those other areas where Fundrise just really thrives. So I'm going to go ahead and log into my account real quick, and we'll come back to the returns real quick. I want to show you, here's like some notifications recently. So here on October 24th, my portfolio has acquired a new project. So here it is. Like talk about, this is so cool to me, right? Rental home community near Atlanta, Georgia. And it has pictures of all the different things. It talks about the business plan. It talks about why they invested into it. Fast growing area. And then if you want to find out more about the project, boom, you can find out more details. Like this is so cool to me. Value add. So investment size, 4.4 million. It shows you which of their different funds that this one is in, gives you a timeline. So right now it shows you being acquired. Ever so often, I will get an email or a notification saying that, hey, this project has either been sold, it's been paid out, like whatever they've decided to do with it. So that is just like one of the recent ones. Here's another one. We acquired a new home construction in Myrtle Beach, South Carolina. Okay. So we're invested in the acquisition and development of approximately 302 acres as a future site of a 251 single family homes. So yeah, I mean, I just love this stuff, right? And one of the things I thought was really cool on top of this was living here in the Nashville area, I was going through some of the properties, that my portfolio owns. And I swear, I can't 100% confirm this, but when I saw the picture, I'm like, I have seen those apartment complexes, like, just drive, because we've drove through like downtown Nashville, or we'll call it the outskirts of downtown Nashville, just to see all the different properties. I mean, because Nashville, like a lot of areas, has just been growing. So there's a lot of like old homes being torn down, being rebuilt. And sometimes they're like where one house was, they're putting up 4 or these apartment complexes. So anyway, I'm like, I saw that picture. I'm like, on my Fundrise account, and I'm like, I know that was the property. And if I wanted to drive there and see it, I totally could. And I cannot think of another investment where you have that capability to do that. So, I mean, you know what you're paying, you know exactly to the penny what you're paying in fees, and you also know what you own. Like, to me, like that is just so freaking cool. All right, let's go ahead and dive back into my Fundrise account so you can see the returns and also just kind of see the history. So when I first started this Fundrise account. This was part of, I was doing this thing called the Grow Your Dough Challenge, where I opened up a lot of different investment accounts, deposited $1,000 into each. And then the idea was like to see, oh, how does the $1,000 grow in each of them? And I still have several of those accounts, but with Fundrise, what happened here is that I end up adding more money as I've gone along. So you can see here, this is back in February 2018. That's when I started. Then I added some more money and I added some more money. And I do not think, if I've added any money, the only reason I've added money is because Fundrise has their own IPO. It's like an internet IPO. I'm not going to spend any time talking about that here. That is a whole separate video. But essentially, for me to take advantage of the IPO, I had to add more money, and that's what I bought. Now, with the returns that you see, none of this reflects their IPO. Like, there have been no dividends paid, there has been no appreciation. The IPO, the value is just showing whatever I paid for it. So I just want to make sure that's clear. Any returns, any dividends that you see on my Fundrise account, that is from the real estate investments, period. Nothing from the Fundrise IPO. So we can clearly see, here we go. We got a total value right now of $11,482.16. Net returns to date, $3,424.32. I currently have the core portfolio. There are different ones that you can invest into depending on how much that you start with. I think their starter one is 0. I think 1,000 might be the next one up. And it looks like if I wanted, I could deposit $1,576 and get to the next level, upgrade to advanced, unlock all the benefits of core, plus direct access to specialized investment strategies, access to specialized funds. It's something that I may do, not anything I need to do today or immediately. You can also see the breakdown of what I have. So this is my portfolio. So currently have 19.7% in fixed income, 31.7% in the core plus, 38% in value add, and then 10.4% in opportunistic. Basically, it's like, just imagine if you've ever set up like a 401k, any investment account, they want to know, what is your investment strategy? What is your investment risk? Like, how comfortable you are, what's your timeline? What are you trying to achieve? And so basically you're answering those type questions. And with that, determining, well, how risky do you want to be? So like opportunistic, I believe, I'm not mistaken, that means that we're looking for opportunities that are a little bit more higher risk, so which then should generate higher return is the idea. So right now I've got 10.4% there, and the rest is spread out between value add, core plus, and fixed income. So now let's go ahead and dive into just seeing some of these returns to see how it has done, how much money it has made. So these are all the different REITs. So they have the East Coast REIT, a growth REIT, and we can look at those. I really don't want to spend that much time. I'd rather look at the annual returns to see. Make sure that you can see that. Yes. So once again, if you recall, I deposited my $1,000 roughly in the beginning of 2018. So it wasn't for the full year. So in 2018, 7.4% is how much I made percentage-wise. And that's the weighted average. Let's see. And then 2019, I made 9.2%. So 7.4 for 18, 9.2% in 19, 2020, 7.6%. That was a good year. Another good year, 23.9% in 2021. And 2022 year to date is 7.4%. 7.4%. Now, if you think about, which we'll talk about here in one sec, talk about what the stock market has done, what crypto has done, what other investments have done, how they have performed, 7.4% is pretty dang good. I ain't gonna lie. I am happy that I am up 7.4%. That's better than negative 7.4%, better than still what my savings account is paying. So 7.4% net is what I have made. So that is taking out all of their fees. Once again, that is net, my net return, not gross, which means like, okay, minus 1%. No, that is my net return. And then if we take the all-time average from being in Fundrise since partially in 2018, we're looking at a total return of 12.9%, not too shabby, 12.9%. For those that might be skeptical, just because, I get it, because I talked about this whole Fundrise IPO. Are you sure? Like, well, let me just break this down for you. So here is, I've now clicked over to my portfolio tab. You can see that 73.4% of my portfolio is in their real estate investment platforms. Fundrise IPO is 26.6%. I have invested $3,057.84. And as you can see, it's currently showing as worth $3,057. Now, it could be worth more, but that's not reflected in the total gain. The cost basis in all my real estate holdings with Fundrise is $6,261.76. Now, that does not mean that that's how much I invested, because for those that don't understand how cost basis works, if you put $1,000 in any investment, it could be in Fundrise, could be in a stock, and that stock pays a dividend or a capital gain. You put $1,000 in, and then you get paid out that dividend or that capital gain, and that then is reinvested to purchase new stock or more assets, basically. Then your cost basis goes up because now you're buying it again. Now, you haven't added any more money. You've just used the dividend or the interest or the gains to buy more. But then that also means that your cost basis goes up. And I could do another video if I need to, if you want to understand more about cost basis. But for those that, let me just break it down where it's even simpler for you. I want to show you my transactions so you can see. Going back to 2018 at the beginning, $1,000 is how much I put in initially, another $4,000. And I think I did that to jump up to the next level so that I could buy the Fundrise IPO. And everything else that you see here is a dividend, 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 dividend. Here is an investment where I added money to buy the Fundrise IPO. There's $2,500, dividend, 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 growth, gains, dividends, dividends. And then there's another somewhere in here. I saw $497. So February of 2022, I added an extra, I don't know if I forgot why, but it's $497.04, whatever. I don't remember why, but I haven't added any more money other than that initial $5,000. So I put $5,000 in. That was, as I mentioned, my cost basis is $6,261.76. Position total, $8,424.32. So roughly a gain, not including the Fundrise IPO, but looking at that gain, it's about $3,420 in my Fundrise account. Put in $5,000, I've made $3,400. And one of the best things, you know how much work I've done? You know how much work I've done managing my portfolio, keeping tabs on the property managers, keeping tabs on Fundrise and what they're investing into? Nothing, not a dang thing. Before I move on though, I did want to show, as I was clicking around, I did find here are currently in all of my real estate investments inside the Fundrise portfolio, I have 175 projects. So here are some of the, I think these are the ones we just saw. Single family rental in Georgia. Here's some more in South Carolina, a single family rental in Denton, Texas. For all my Texas fans, Houston, Texas. Here is an industrial, looks like some sort of warehouse, something. That's in Maryland, Hagerstown, Maryland. South Carolina, Myrtle Beach, Richmond Hill, Georgia, Smithfield, North Carolina, Jacksonville, Florida, Taylor, Texas. I mean, I love this. Like Tempe, Arizona. So at North Las Vegas, it's everywhere. So whenever you are opening an account with Fundrise, like you are literally investing everywhere. But now we've seen what Fundrise has done, and you kind of know how the markets have done. But obviously, when you invest into something, you have the power of choice. You have the ability to choose. I chose to invest $1,000 in the beginning and then add an extra $4,000 into Fundrise. Now, what if I would have invested somewhere else? What if I invested in the stock market? What if I invested into an ETF or into crypto? Would I have done better? Well, let's look at some of the returns of other investment choices that I had that you would have had in that same time frame, just to see how they have performed over that same stretch. Let's first start and compare it to a Vanguard real estate ETF. Symbol is VNQ. I want to start here because for most people that are investing into real estate, and you think of something that allows you to invest without leaving your couch, buying an ETF, a real estate ETF is one of the easiest things. So if you want to buy this, you can buy this pretty much anywhere. Symbol is, once again, VNQ. So here is the overview. Here is how VNQ has done year to date, negative 26.79%. Ouch. Now, as a refresher, Fundrise, year to date, positive 7.4%. That's a pretty big difference, but that's just 1 year. Let's look at the other years to see how it has compared. And there are some years where it did outperform. So when we start looking at this annually, so in 2021, it performed 37.79%. Once again, compared to 23.9%. So that is a significant outperformance by the Vanguard ETF. 2020, negative 6.9%, 6.95%, excuse me. Whereas in 2020, positive 7.6%. And now, let's see, in 19, 9.2% for Fundrise as opposed to 25.56% for the Vanguard ETF in 19. And for 2018, once again, that was for the whole year for Vanguard, negative 9.09%. Now, I was only in Fundrise partially, but net 7.4%. So the one thing that I'm seeing here, I don't, maybe you're also seeing a common theme with Fundrise, positive, 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 positive. Up to this time, not saying, past performance does not guarantee future results, but the time that I've been in with Fundrise, I have yet to experience a negative year, as opposed with Vanguard, 18 negative, 20 negative. Now in 2000 and this year to date, negative 26.79%. And the one thing is one of those things like I remember, I forgot who told me this. It was probably some other advisor I used to work with back in the day. I just remember him saying, like, I would much rather have smaller returns as long as I don't have negative returns as opposed to having any big drops. Because what people don't realize is, like, if you lose 10% in any given year, it doesn't make 10% to make you whole. Because if you lose 10%, like if you have 100 grand and you lose 10%, now you're down to $90,000. Well, if you made 10% of 90,000 is 9,000. So you're only up to 99. Like, you're still down $1,000. So to make yourself whole, you actually have to make more than what you lost. So that's why anytime I see a year like this, where we're down 26.79%, like, I mean, that's awesome that in 2021, we were up 37.79%. But if we were negative the year before, positive, and then negative again, like, we're sitting in the negative right now. And I think I actually even had their 3-year return is 0.85%, 5-year return. So 4% for the 5-year, and the 10 years, 6.69%. And for the time I've had my Fundrise, 12.9%. All right, so that's Vanguard Real Estate Fund. What's it called? The Real Estate ETF, Vanguard Real Estate ETF. That was a really hard job. Let's look at another ETF. This is also with Vanguard, but now we're looking at a totally different sector. We're looking at the stock market. And I think you're probably, the stock market's been great, right? We've had an amazing run. Let's look at how this VOO, symbol is VOO, the Vanguard S&P 500 ETF. VOO, I love just saying VOO. Say it with me, VOO. How has VOO performed year to date? So year to date, we are down negative 17.71%. Okay, what about annually? How has it performed? Similar, we're up big in 2021 at 26.91%, positive in 2020, 16.24%, positive in 2019, 28.82%, and then we have the negative year in 6.23%. If we look at the summary, we've got a 3-year return of 10.16%, a 5-year return of 10.4%, which I think is a fair assessment. And we can even look at the 10-year return at 12.74%. Going back as a reminder, Fundrise 12.9%, no down years. Now, and we all know this, right? We're not comparing apples to apples here. We're looking at real estate, we're looking at the stock market. It is two totally different things. When we talk about diversifying, you want to have some money in real estate, could be in Vanguard, could be with Fundrise, could be in something else, could be in actual physical properties. You also want to have some money in the stock market. Even your money in the stock market, you want to have diversified. I just wanted to show you something to kind of gauge so that you could see in comparison how it has performed. Now, the other one I want to show you, which I think last year wasn't a fair comparison because of how amazing it was doing, and that was with Bitcoin. Many people know now Bitcoin hasn't been doing that great. We're in, I think, crypto winter or the crypto apocalypse. I don't know if they've actually named it something different. So year to date, Bitcoin is down 57.74%. Ouch. If you actually go to the blog, I've got a running tool that shows the Bitcoin returns going back since its inception, going back to 2011. But if we look at 2018, that was a bad year to start. If you started in Bitcoin in 2018, very similar to what we're experiencing in 2022, you would have been down 73%. Ouch. Look out. 2019, 95%. 2020, all right, here we go, 301%. 2021, 90%. That's a good run. Like, that is a fun 3 years. This is when I couldn't shut up about Bitcoin. You probably notice I've not done a Bitcoin video in a while. This is part of the reason. So 18, negative 73, 2019, up 95, up 301%, up 90. And then once again in 2022, ouch. But we had a nice 3-year stretch, right? I mean, if you look at the 3-year return over that time frame, I mean, it is still annihilating, obliterating the stock market. It's obliterating Vanguard, a real estate ETF. It's obliterating Fundrise. But I mean, we're not comparing apples to apples, right? This is like apples to unicorns. Is that a good analogy? I think you get the idea. It is a much higher risk investment, so you should see more volatility than you do with Fundrise. So that's just a few of the different options. Obviously, we could go so many other directions, but just to kind of give you an idea, how is Fundrise comparing to other investments that you have at your disposal right now, that right now you have the choice to put money into a Fundrise, into a Vanguard ETF, into another crowdfunding platform. Like, you have choices. So I just wanted to show you what those returns have been, compare that to Fundrise. Now, let's answer the final question. Is Fundrise good for you? Is Fundrise make sense for what you are trying to accomplish? Now, this is going to be the biggest cop-out answer that there can be, and it's always going to be my answer. And the answer to the question, is Fundrise make sense for you? The answer is, it depends. It depends on what are you trying to accomplish. It depends on how much you have to invest. It depends on where you're at in your investment savings, financial freedom journey. Like, if you're just starting and you don't have any money in the stock market, if you still have a lot of debt, Fundrise, it's not right for you right now. Doesn't mean it won't be right for you later on. Doesn't mean it won't be right for you whenever you have a Roth IRA, you have a 401k, you've got your debt in control. For me, when I look back, I love to tinker. I love to try new things. That was one of the reasons why. But the other reason too is, for me, like, I didn't have a lot of real estate exposure in my portfolio. In addition to Fundrise, I also have some private REITs. Now, with those, there is like a minimum, I think they were like 25 to 50,000 to get into those, which even with those, I'm investing into something that it's like an apartment complex, or it's a very specific real estate investment, as opposed to with a crowdfunding platform like Fundrise, like you saw. Like, with my $8,400 portfolio right now, I have 175 different investment properties. Like, that's insane. Like, think about that, right? And that's what you have exposure to, investing as little as $1,000. I don't know if you get access to all those with the $10 investment, but you get access to more than just one property. And that's what I love about Fundrise. So if that makes sense for you, then by all means, take a look at Fundrise. Consider it as part of your investment portfolio. They have regular, like what you saw of mine. Mine is a quote unquote trading account. You can also do a Roth IRA. Like, if I didn't have all my money already tied up in investments inside my Roth IRA that I feel have more exponential growth because it's higher risk, I would definitely consider adding some money into, I can add money to my Roth IRA because of income limits, but I'd have to transition some of my money. But right now it's tied up into a lot of more high risk stocks, some crypto type investments. So for me, I'm looking for a bigger payday, high risk, high risk, high reward in my Roth. But for you, if you want to own real estate inside your Roth IRA, man, Fundrise is a great consideration for your portfolio. All right, y'all, hope you enjoyed this. If you did, you know what to do. Like, subscribe, share it with a friend that needs to know this. Share the wealth. Love your friends by sharing some great information. Until next time, this is Jeff Rose reminding you that it's your money, it's your life, and only you can make it awesome. Until next time, peace.